Hello, good afternoon. Zach Lucas from McCarthy Denning. Just going to commence this webinar early so that we can go through and explain who the participants are and also some of the virtual roundtables that will be held later on this month and going into next month. So just to run through some of the program that we can expect to see in the coming weeks. Obviously, we'll have the trustee liability private client virtual roundtable that will be held on the 8th of July, so next week, Wednesday this time. And we'll be joined by a number of law firms on conducting this particular virtual roundtable, including Rajan Tan, Shuklin and Bock, Sabara Law, and Roan trustees will also be in attendance. And as with all of these virtual roundtables, the idea behind them is to look at topical issues that are challenging the industry in the current COVID-19 crisis. Later on into August, we will have the Malaysia Private Client Virtual Roundtable. The actual date for this in August will probably be the first week, but this is yet to be confirmed. And we will also likely have Hong Kong Council join us because some of the fact patterns in this will involve in the interaction between Malaysia, Labuan, and Hong Kong. So that's something coming in August, and we'll publicize that as and when the virtual roundtable is brought in terms of its confirmation. Okay. Now, for today's purposes, I'm going to be joined by 4 other co-speakers, and unlike other occasions, we basically explain who's on the call. What I'm going to do is invite each of the panelists to just say a few words about what they do, their firm, and you know, sort of what they can help with in terms of their professional standing. So I'll first Joe Tang to Amicor to just say a few words about Amicor, and a few words about what Joe does within the region and his types of clients, etc. So Joe, if I can invite you to just say a few words.
Thanks, Zach. Amicor is one of the global trust companies with a presence in Singapore and Hong Kong. We have a global presence with 35 offices in 30 over countries. And our clients is a mix of corporate and private clients, usually business owners, where we help the families and their businesses with cross-border investments, tax planning, succession planning, and asset protection structures. That's in a nutshell what we do. Over to you, Zach.
Okay, thanks very much, Joe. And if we could ask Kunchinapat to just say a few words, because we've also got a new law firm, one law office as well. So if Kunchinapat would say a few words about the new initiative as well as the things that you're doing in Bangkok.
Thanks, Zach. One law office is a new law firm set up early this year. From my experience and our team in Bangkok, we work closely with our listed company clients in the Thai stock market and the family business. We do the due diligence, M&A, and joint venture, including commercial contract. In terms of the family business, we take care the succession plan from each other. And support certain family business in Thailand to set up the family office and work closely with the commercial bank, private wealth, and we work with our international alliance, similar to our friend here in this panel, including Joe Teng and Amicor, and the other law firms in Singapore, in Hong Kong, and in US and the EU. Thanks, Zach.
Okay, thanks very much.
Yep.
And I just invite Waishi to say a few words on what you're doing up in Tokyo, in Japan, and the practice area you cover and what the firm's doing generally.
Thank you. So my name is Atsushi Oishi. So I'm a partner of Mori Hamada and Matsumoto, based in Tokyo, Japan. So Morihamada and Matsumoto is one of the big four law firms in Japan. So we have many offices in Japan and also Asian countries, including Thailand. We merged with Chandra, which is one of the major Thai law firms a few years ago. So we have so many colleagues in Bangkok. So I'm working and I'm leading our wealth management team. So we are helping and supporting so many high net worth individuals in Japan and outside Japan.
Right, okay. And finally, if you can invite Andrew Remming of Henley and Partners to just say a few words on what you're doing in Bangkok and your role in the Henley business in Thailand.
Hi, Zach. Thanks a lot for the invitation, and thanks to all the panelists and participants as well for joining me today. I'm the senior manager for business development here in the Thailand office for Henley and Partners. We are the largest citizenship and residency by investment company in the world. Here in Thailand, too, we work to help with our clients and their families with their investment migration planning and all their needs. We have over 33 offices in the world currently and are looking for further expansion further this year, possibly.
Right. I think we're on the hour, the half an hour. What I'll do is introduce the agenda for a domestic, which will look at different areas of practice, property, succession, and then we'll look at an interesting scenario where we have an investment being made into a foreign, you say, as an example, a Thai individual, and what advantages they sort of Sorry, I think I just disconnected there for a moment. Okay. Are we still seeing the presentation?
No.
Okay. Is it
Yeah,
back?
we're back. We got it again.
Switch off my video so that we have a clearance. We've been having some difficulty with the Wi-Fi. So, as I was saying, we'll go through community property, divorce, succession, and foreign investment from a domestic Thai standpoint. And then from a foreign case study point, we'll look at the interaction between Thai and Japanese law. Here, we're looking at emigration from Japan to Thailand, the community property implications, and then later on the divorce and succession law implications of that particular event. So, looking at the domestic case study, these are the main fact patterns. We have, in this case, Tanet, who is a Thai resident citizen domiciliary, married to Rutna and with a child, a daughter, Mali. Tanet owns property, land in Thailand, as well as a trading business. Tanet also has international assets in the UK, land, an investment account, as well as a normal depository account in the UK. And this is the sort of standardized fact pattern that you would find in a lot of the high net worth within Thailand. So community property, domestic community property, and this is a form of matrimonial regime, or how couples hold assets when they're married. Here we would look at the scenario of Tanet and Rutna and what the Thai community property rules are actually, when applied, what they result in. So I'll run through a few questions and then I'll invite Kunchinapat to help us to answer some of these. So the first question I'll ask is, basis of Thai community property rules, does the community property apply to inherited property or property acquired before marriage? Is a pre or post-nuptial agreement legally effective in Thailand? So if I could, Kunchinapat, answer some of these questions.
Okay, for question number one, basis of Thai community property rules, Thailand, we adopt the concept of community property under the family law. And if no special prenuptial contract, the community property will be divided 50-50 between spouse, husband and wife. This is just subject to the registration of the marriage.
Right. Insofar as the community property, its scope of application, does it apply to inherited property?
Yes.
As property that is brought to the marriage, so pre-acquired property, or does it only apply to property acquired during the marriage?
Before the registration of the marriage, we call it personal property or separate property. Then,
Right.
after the registration of the marriage, any property taken place or arisen during the marriage status, it will become the community property. And in case of pass away or death, the community property will be subject to the inherit property.
Right.
Include plus the personal property as the estate of the dead person.
Right.
Yeah.
In terms of nuptial agreements, is a prenuptial agreement or a postnuptial agreement, are they legally effective in Thailand?
Oh, sure. Yes, we have. And then the court, under the family law of the Thai Civil and Commercial Code, and the Thai court adopt the agreement as the agreement between husband and wife. But in the real practice, husband and wife, they stay together as a partner, but not registration. If no registration of the marriage, the prenuptial or postnuptial contract will not be effective.
Right. And is there any particular procedures that need to be followed in order for a nuptial agreement to be legally effective, i.e., do each of the parties have to have separate legal representation?
Oh, sure. If husband and wife they use the same lawyer or same legal advisor, I think it will be a conflict of interest issue.
Right.
Yeah.
But there's no prescribed procedure under Thai sort of law for a legally effective prenuptial agreement. So in other words, there doesn't have to be a whole list of criteria applied in order for it to be effective.
For the process of register the prenuptial contract, the law require the prenuptial contract registered at the same time of the marriage registration.
Right. Okay.
And the list of the asset, is required to break down or grouping of the asset.
Right. Okay.
Yeah.
Now, looking at the foreign assets, would the UK recognize community property ownership with respect to the foreign assets that are owned by Tanet? Yes, in terms of UK law, they do recognize the domicile of marriage, and they do recognize that that may import what they call a community of goods to the relationship. So the community property rules within Thailand would also transpose internationally. In this case, we're looking at the common law jurisdiction of the UK, and that would recognize community property rules. In terms of domestic divorce, so looking at the rather sort of somber situation where Tanet and Rutna were to go through a divorce, questions that would be asked here is this: the basis on which a Thai divorce court will exercise jurisdiction and grant a divorce. So what are the characteristics or the criteria applied? Is it registration, citizenship, or is it residency? Would a Thai court seek to redistribute or alter or disturb community rights? Or if there has been a nuptial arrangement, would would the Thai divorce court amend or vary the terms of the nuptial agreement? So I think if we just start with the basis on which a Thai court will actually entertain divorce proceedings, what needs to be there with respect to the couple for the Thai court to say, yes, we have jurisdiction over your marriage and we have jurisdiction over your divorce?
In case of the registration marriage done in Thailand, the court will take over this case. And in terms of divorce, you can do by optional ways. Applicable divorce, you can go to the the government office to make a divorce registration, or you just bring the case to the court. This is I can say a hostile divorce, a non-amicable divorce, and the court will take control on this on the basis of registration in Thailand. Yes, the court has the power or jurisdiction to consider the case.
Right. So they primarily look at registration and citizenship as the basis on which they can have jurisdiction over the couple to grant the divorce. Is that correct? Instead of they just happen to be resident?
Yes, yes.
Right. And how do we deal with the community property and the nuptial agreement? If there's no nuptial agreement, but there's default community property rights, would the court seek to vary those community property rights, or would they just respect the ordinary 50-50 split of assets?
The court will follow to the concept of 50-50.
Right.
Or prenuptial contract.
Right. And okay, so they literally just follow those rules and they don't exercise any form of discretion to reapportion those assets.
Yes.
Right, okay. Insofar as the UK is concerned, would a Thai divorce court seek to make an order in relation to foreign assets such as the UK property? And then separately, would the UK court enforce a Thai order affecting UK property? So I think the first question's for you, and the second one I'll have a look at.
Yeah.
So
yes, Zach, please.
yeah, just saying, is it common for a Thai divorce court to seek to make extraterritorial orders affecting foreign property in a divorce proceeding?
In terms of the Thai court, the court will consider the sovereignty between country and country, right? The Thai court have the jurisdiction under the Thai law and control the Thai asset. In terms of the UK, it depends on the local law in UK.
Is Thailand, just separately, does it have reciprocal enforcement treaties with other countries, or is that something that is not currently done? So there's no real treaty network for enforcing judgments.
I think they have, but the process are not easy because you have to deal with the Ministry of Foreign Affairs. You have to deal with the Ministry of Justice, and then you bring the court order from Thailand to the UK. And in case of the UK court order, you have to pass through a government agency, but not easy by practice.
Right. Okay. I think from a UK perspective, as I understand it, there is no reciprocal relationship with Thailand in terms of the enforcement of these types of judgments. And I think it would then fall to the UK to apply common law principles to assist the Thai court in enforcing. But I think generally, wouldn't it be more pragmatic that the Thai court, it has a sort of authority over the divorcing couple if they remain in Thailand? They would just simply order, in this case, Tanet to transfer assets in satisfaction of the divorce. And if he doesn't, he would be in contempt of court, correct?
Yep, yes.
It's a more practical solution as long as he stays within the jurisdiction.
Right.
Now, from a succession standpoint, a domestic succession standpoint, so here obviously we have the scenario of Tanet passing away, being survived by Rutna and Mali. The questions are the basis and application of Thai succession laws, and we'll look at immovable property, movable property, and this concept of domicile in Thailand. And does Thai succession law include forced heirship rules, like the civil law jurisdictions in Europe, for instance, can a dependent make a claim against the estate? And then separately, is there any Thai inheritance tax? So I think the basis of the application of Thai succession laws, the difference between immovable and movable property, and how that applies, and going looking at the heirship rights. If I can invite you, Chinavat, to take it through that.
Oh, yes, the Thai succession laws, we separate into two ideas. The first one is if you have no will for such person, the
Right.
court will consider the general succession law in case of no will. And then the immovable property in Thailand and movable property, the court adopt another issue, not domicile only, but nationality and the place of the of property.
Right. So it wouldn't seek to look for a foreign law to govern the domestic assets.
That's
Okay.
right.
Insofar as I understand that if you don't have a will, there are intestacy rules that deal with the succession, but there's no, as far as I'm aware, there are no fixed shares under Thai law that have to be given, that you can't override through a will. Is that correct? You basically have testamentary freedom in Thailand.
That's right. The will shall prevail and override the general succession law.
And then in terms of Thai inheritance tax, can you just explain briefly, how does that actually apply to a deceased estate in Thailand?
Okay, the Thai inheritance tax, including the gift tax, we adopt back to last 4 years. And then the first 100 million baht will be exempt, and over 100 million baht will be subject to 5% or 10%, depends on the successor or the recipient of such estate. And only for inherit estate or asset that's subject to the Thai inheritance tax. The first one is the land and building. The second one, cash at bank. The third one is the shares in stock market or outside stock market. And the last one is a vehicle, car, jet, yacht. This is a 4 asset that's subject to Thai inheritance tax. Yeah, and the rule that apply for the person who liable to the Thai inheritance tax. In Thailand, we adopt similar to other countries, only 3 concepts. The first one, if you are Thai nationality and you derive the estate offshore, this is subject to Thai inheritance tax. The second concept is the resident in Thailand. The third one is the asset located in Thailand. This is subject to the Thai inheritance tax. Right.
Okay. And then on to from a UK standpoint, because we've got a Thai resident citizen domiciliary passing away. From the UK standpoint, there'll be a question on which succession law will apply.
Yep.
Stocks and shares, would it be Thai or UK? In this case, the UK would defer to the Thai domiciliaries law. And it's pretty similar because you have testamentary freedom in Thailand as the same in the UK. The succession law that would apply in the UK with respect to UK land would be UK law. But again, we have a universality here because both jurisdictions allow testamentary freedom.
Yep.
In terms of the process to apply to get a UK estate going, you would have to apply either through having a will, through probate or administration as required. So there would be a formal proceeding in the UK to do that. There would be inheritance tax implications if the estate is sufficiently valuable, so effectively above the value of 325,000 sterling. Now, in terms of the UK and Thailand, there is no inheritance tax treaty between the 2 jurisdictions.
No.
And what happened I suspect from a Thai perspective, the Thais would, the Thai tax authority would credit UK inheritance tax, if any, paid on the estate as against the Thai liability apportioned to that particular asset. Is that correct?
In this case, Zach, the special treaty for inheritance tax, no. We just have the general double tax treaty between UK and Thailand many years before. After that, the Thai inheritance tax just come to effect around 4 or 5 years back. Then I don't think this is a part of the treaty in terms of inheritance tax. But you know, the domestic Thai tax law, inheritance tax and gift tax is a part of personal income tax.
Yes, yes, right. Okay, so, but there would be unilateral relief if they were a UK charge.
Yes. Yes.
Okay.
Yeah.
From a foreign investment standpoint, we're just going to move the fact pattern on a little bit. So here, Tanet is going to be making an investment into Singapore, and in this investment, he will be investing into a form of insurance wrapper and also bankable assets through an investment account.
Yep.
And the idea behind this discussion is to see whether or not Tanet can do this lawfully, and what is the best route, if it is possible, what's the best route for Thai individuals to invest outside of Thailand. So the questions are basis on which foreign investment may be made, whether foreign investments may be held directly, tax consequences of directly held foreign investments, and will there be any CRS, common reporting standard, reporting from Singapore to Thailand with respect to these assets acquired in Singapore? So I'd invite Joe to lead the discussion on these particular questions.
Okay, so for the first question, basis on which the foreign investments may be made, Thailand has changed quite considerably over the past 5 years, from previously where they had foreign exchange controls. The Thai authorities have then liberated the regime, and they allowed Thai people to invest in foreign properties and foreign insurance policies. Lately, Thai people are allowed to invest up to $5 million per person, $5 million per person a year, to invest in overseas bankable assets. The process is that when they make the investment, they have to report that to the Bank of Thailand. And in that report, they also have to undertake that while the investments are abroad, that the moment they take profits, they will bring the investments back to Thailand so it can be taxed. Whether the investments may be held directly, yes. And the tax consequences of directly held foreign investments, Thailand has this very interesting semi-territorial regime, whereby any income that is earned outside Thailand, if you keep that outside of Thailand during the same fiscal year in which you earned that income, and you repatriate it back to Thailand in the following fiscal year, then that repatriation in the following fiscal year will be free of income tax in Thailand, which is very interesting. This is based on law as being confirmed by Kun Chinapat.
Sure it is, Joe.
And on the last question, is there any CRS reporting from Singapore to Thailand? Thailand, about 1 month ago, under a bit of pressure from the EU, has finally announced that they will be rolling out CRS in Thailand starting 2022. So as you all know, Singapore is already participating in CRS, and since 2018, all the reporting financial institutions have to report the reportable accounts to the Singapore tax authorities. So once Thailand and Singapore are agreeing on the mode of operation in the regards to CRS, then Singapore will also start to exchange the information that they will get on record from Singapore with Thailand. So that's sometime in 2022. So everybody still has some homework to do to make sure that they understand what is being reported.
You know, Joe, in Thailand, the Ministry of Finance is the regulator on this CIS issue. And now the Thai Revenue Department are in the process to draft the law. And the law now under the process of public hearing. And hopefully it will become to effect in the next few years, I think, as you mentioned, yes.
Some homework to do.
Yes, yes.
Okay.
In terms of what if we were, and I'll just show the animation again, what if we were to put the Singapore investments into trust? So if we were to transfer, what if we put the investments are held in trust? What would be the Thai succession and inheritance tax implications if instead of holding the assets individually, Tanet were invited to create Singapore trusts? So that's from a succession standpoint and from an inheritance tax implication.
Okay, Zach, this is my turn, right? Okay, you know, Thailand, we are the country adopt the civil law system different from common law system or English law system. The trust concept are under the English law system. But you know, the Bank of Thailand, the Thai SEC now are in the process to draft the law of private trust. Right. To govern the family trust, because from the past up to now, the Thai people, many people set up the trust offshore in Singapore, in Jersey, in Hong Kong, Nevada, many offshore countries. Yeah. Then the law will come into effect next 2 years. I understand that, and in case of the transfer of the asset from the central from Thailand to set up the trust offshore in the past, it depends on the nature of the trust. If you deal with the revocable trust, it means that you still control. Right. You still control. It is you use another entity or another pool of asset, because a trust can be a corporation. Trust can be the pool of asset, no legal entity, right? In another case, if you set up a revocable trust or you set up the PTC, private trust company, Joe may add me, may add me on this PTC in Singapore. It depends on if you cannot control. Right. It can be treated as you transfer the asset to another entity and maybe subject to Thai tax.
Right. So the key thing here is the inheritance tax will apply if effectively you retain control of the trust. But if you don't, then the inheritance then it can have an inheritance tax advantage eventually, insofar as when the settlor passes away.
Yeah. Okay. The draft law for family trust in Thailand, we adopt the concept of a trust law in Singapore. And the age of the trust law in Singapore, 100 years. If I'm wrong, please correct me, Joe. 100 years, right, in Singapore. And in Thailand, we adopt the same idea, 100 years for Thai trust. Right. And you can plan, in case of in Thai inheritance tax, you can plan to do the will. If expire of the first trust, you can decide the content of the will to set up the new trust, right?
Or new trust, right? But when you create the trust in Singapore, is there a immediate inheritance tax charge in Thailand when you initially create the trust, not on death, but during the individual's lifetime?
Oh yes, you can do that. You can do that because in case of the family trust in Thailand under the draft law or outside Thailand, you can do still alive or after death.
But what about the inheritance tax? Does it apply also to lifetime transfers into a trust?
Oh, yes.
Right, okay. So in this case, if Tanet were to transfer these assets into Singapore trusts, he would have to pay Thai inheritance tax. Is that correct?
Oh, but Tanet is still alive, right? Still alive.
Yes.
And then he set up the trust during still alive, and
Yes.
then they draft a bill to govern this trust control and management for the beneficiary.
Yes, true. But on initially transferring the assets into the trust during his lifetime, is there a Thai inheritance tax payment?
Should not be taxed. Should not be taxed because the trust is the another pocket, another place of the asset pooling for central Tanet.
Right. But
Yeah.
if it's a type of trust where he doesn't retain any benefit and he can't control, then
Yeah.
it's a tax charge.
Yes.
Is that right? Okay, so that's the key thing here.
Yeah.
The level of control that he retains on the
Yeah.
trust as to whether or not the inheritance tax will kick in. Okay.
But you know, Zach, in another case, not only tax, because if such assets are the listed company, for example, Tanet owns shares in the listed company in the Thai stock market. This is another issue because not only tax issue, it is a SEC or security law issue as well.
Of course, he'd have regulatory issues as well. Got it.
Yeah.
Okay. So we move on to the foreign case study, and we'll first look at the situation of emigrating to Thailand. This is the fact pattern. We've got Akira Kin and Atsuka, and they are currently resident, domiciled, and citizens of Japan. And here we see Akira owns land, investments, and cash. He also has land investments both in Thailand as well as in Singapore. And the scenario that we're playing is that the family decide to move from Japan to Thailand. Now, in looking at this, the first thing that we're going to run through is how can a family move across? So what's the emigration options available to families to move into Thailand? And this will naturally lead us to discuss the Thai Elite program, the eligibility and requirements for this very popular program, application process and the due diligence requirements, and whether or not you can escalate through to become a Thai PR or a citizen going forward. We'll also mention some of the other regional programs that are available in Southeast Asia. So just to start, now invite this question from Henley and Partners. If you can run through with us program and all of these issues that we've posted up here. Andrew, can you hear me?
Yep, I can hear you. Yeah, thanks, Zach. So the Thailand Elite program provides its members with 5, 10, or 20-year privileged entry visas to stay and reside in Thailand. It's classified as a tourist visa. It's a multiple entry visa, which allows its members to come and go as many times as they wish throughout the year, or if they wish to stay consecutively for the duration of their program, they can do so. It's one of the more unique visas in that sense. They would have to pay an extension. They would have to pay for a visa extension if they do stay consecutively for over 365 days, however, but it's pretty unique in that sense. For Akira and his family, it depends. How I like to break the program down to my clients is that for the 5, 10, or 20-year options, there's an individual can apply or a family can apply. So it depends on Akira-san and his family's wishes to stay in the kingdom for 5 years or 10 years or 20 years. For the 5-year program, they could apply for the program, which for its minimum requirement is a couple. So that could be Akira and Kin. It would cost them 800,000 Thai baht. For any dependent, it's an additional 300,000 Thai baht. So for the 5-year program, that would only cost him 1.1 million. For the 10-year program, for say Akira being the core applicant, it would cost him 800,000 Thai baht. And for each additional dependent, it's 700,000 Thai baht. So for 10 years, it would cost him 2.2 million. And depending on which program, then he decides there are two options for the 20-year program. He could, Kira-san could purchase elite superiority extension visas, which is a 20-year visa at 1 million baht each. Or if he wishes to become an elite ultimate privilege member, that's 2 million baht each. And his family could also join them subsequently for 1 million baht each. For the elite ultimate privilege program, that does include all the bells and whistles that you hear about, the golf and the unlimited airports of Thailand limousine transfers and the spa as well. They would be limited to, well, the family members would be limited to 10 visits to the golf course per year, and Akira-san would get 20 visits to the golf course per year. However, it is unlimited airports of Thailand transfer services. Eligibility really just depends on if, say, anyone has ever been bankrupt before, has a criminal record, or has previously overstayed a visa in Thailand. If none of those fit to Mr. Akira and his family, then they should be good to go. The application process currently is about 2 to 3 months. It really does depend on the Ministry of Foreign Affairs, but average to say is 2 to 3 months at the moment. And unfortunately, however, one of the caveats of the program is that it does not lead to permanent residency or citizenship.
Right. I wonder if you could mention, I think the main competing program is the Malaysian program, the Malaysian My Second Home. I wonder if you could just mention how that program's going, Malaysian program as against the Thai program, without any disparagement here, but just looking at the two, because they are the competing programs, I think, within the region.
Sure. Yeah, no, in Southeast Asia, they definitely, I would say that they are competing programs. I mean, even looking at it objectively, the Thailand Elite program is one of the more, say, cost and time effective residency programs in the world. Even as you mentioned regarding to the MM2H program, currently processing times are maybe 12 months plus. And I did just receive a memo the other day that the MM2H office has currently closed and is moving to the the Immigration Department of Malaysia, and they're not accepting applications until further notice at the moment. So it's difficult to say exactly when your application would be processed or approved currently. And also the fund requirements to apply for the MM2H program are quite a bit higher, more substantial than for the Thailand Elite program. It's 350,000 ringgit for someone aged over 50 years old, which is about $98,000. And for someone under 50 years old, it's 500,000 ringgit, which is about $150,000. Also, if we look even on the other side of the world and we compare the Greek Golden Visa program, that requires a minimum investment into real estate that costs 250,000 euros. I mean, and that also, if you want to compare bells and whistles too, there's no golf included with the Greek Golden Visa programs.
Just with the Thai Elite program, it is assured in terms of its future. Is that correct? Because is there something in the press dealing with the Thai program looking more at highly skilled individuals rather than this sort of mass visa approach? Or what's the security on this program? Is it likely to remain, or do you feel it's going to be something that will effectively come to an end?
No, I actually see the program expanding at the moment. I think you are correct in the terms that the Department of Immigration and the Tourism Authority of Thailand are trying to cut down on mass tourism, quantity tourism, and they're trying to focus more on quality tourism that comes into the country. Anyone that can afford to go through the Thailand Elite program does bring adequate amounts of FDI into the country. I mean, not only just the investment into the visa, but also the condominiums that they purchase, automobiles that they purchase, businesses that they start up or invest in the country. So the Thailand Elite program is definitely here to stay.
Right, got it. Okay, I think just transitioning now to looking at some of the more technical bits of the transition out of Japan. Japanese tax consequences on actually emigrating to Thailand. And here we look at the the distinction between Thai tax residency criteria, the Japanese concept of domicile, and then the applicable double tax treaty between the two jurisdictions. So if I can invite just a general discussion around the exit tax from leaving Japan, and then the basis on which that tax is based, which is either that you are retaining, you're leaving your residency, or you are leaving behind your domicile. So just to try and understand a little bit more about how the Japanese exit regime works in this scenario.
Yes, so Japan has an exit tax system, and exit tax is a kind of a capital gains tax. So that's why when Akira-san and his family moved from Japan to Thailand, such exit tax is triggered. And if they have some stock or securities, well, some other bankable assets, those assets, and also those assets have some, built-in gains, that gains should be taxed as a capital gains, as an exit tax.
Right.
So, yeah, so we have to look at when they live and where they have domicile. So if they change their domicile from Japan to Thailand, that exit tax triggers. So next question will be, what is a domicile under the Japanese tax law? But unfortunately, it's not clearly defined under the law. So we have some case law. And according to such case law, usually Japanese courts will look at their occupation and their family and their residence and how long they stay in Japan. So those factors will be considered by the court, and the court will finally determine where they have a domicile for tax purposes.
Right. And if they decide that, well, let's just deal with the Thai side. So, Kunchinapat, from the Thai side, tax residence.
In terms of the Thai tax perspective, the personal income tax under the Thai Revenue Code, we focus on the physically stay in Thailand and consider from the passport. If in a calendar year means tax year for personal income tax purpose, if in a calendar year such people stay in Thailand over 150 days, it will be a Thai tax resident.
Right. So if we have a situation where the parties are seen as both Japanese tax residents.
Yep.
How figure this out? So how would we apply the double tax treaty to determine the actual tax residency?
Okay.
So sorry, how will the double tax treaty apply when the Japanese couple is seen to be still Japanese domicile as well as Thai tax resident at the same time?
Okay. In terms of the Thai personal income tax purpose, we
be the one. So actually, in terms of the Japanese context here of, we've got Japanese couple who are still domiciled in Japan, but they're also now applying Kunchinapad's analysis, Thai tax residents. How do we sort this out? Because they can't be both.
That's right. I'll go back to the tax treaty between Japan and Thailand. In Thailand, under the domestic tax law, we have no domicile rule. We have the rule, source income rule and resident rule. And the resident consider the 180 days in a calendar year. But if any conflict between the tax treaty issue on the domicile, as Oishi-san mentioned earlier, we have to go back to the treaty for each provision. If Mr. Akira cannot be the taxpayer payer of two countries at the same time.
Correct. Right. So, Sushi, how is this going to be sorted out?
Yeah, actually, Japan has a tax treaty with Thailand, and usually OECD, tax treaty model usually have a detailed tax tiebreaker rules. But under the Japan-Thai tax treaty, the tiebreaker rule is very simple. It just says, both government will discuss and agree on where they have domicile. So
Right.
not so clear. And another, problem is such tax treaty only applies to income tax, and inheritance tax is outside the scope of the such, tax treaty. So in terms of the inheritance tax, there should be some potential double taxation risk.
Right. Okay. But the key thing here is, if you've got yourself in the unfortunate position of being seen as both Japanese as well as Thai tax resident at the same time, you have to actually approach the authorities for them to sort it out. There's no other way of doing it, which presumably involves technical lawyers like you guys getting involved. Okay. Community property. So what we're looking at is, we've obviously have the couple from Japan moving to Thailand. And the question that comes up is, they're resident now in Thailand, but what happened to the community property rights that they had in Japan? Is that transposed into their Thai property, or is it effectively because they're resident in Thailand, is it now that the Thai community laws will apply in Japan? Trying to figure out how the community matrimonial domicile, as it moves across into Thailand, whether or not it has an effect on the assets as they were then owned within the community regime of Japan. So the question will be, will Japanese community property rights continue to apply to Thai and Singapore property, even though the couple are now resident in Thailand? And then reversing it, will Thai community property rights apply to Thai, Japanese, and Singapore property going forward because they're resident? And then what will Singapore make of all of this because of the change of residency? So I think the first one is for Atsushi-chan, for you to have a go. Will Japanese community property rights continue to apply to Thai and Singapore property?
Yeah, the answer is yes. From a Japanese perspective, the Japanese law will still apply because Akira and King have still a Japanese. They are still Japanese nationals. So that's why Japanese, community property rights rules will still apply. And under the Japanese law, we have a 50-50 rules. So basically, we have to follow such 50-50 rule. But there is one exception. So if they enter into one written agreement which says the governing law should be Thai law, that should be okay from a Japanese perspective. So which means they can change the governing law from Japan to Thai by signing some written agreement.
And for question number 2, agree with Oishi-san. The Thai community property rights apply to Thai, Japanese, and Singapore property because under the law of conflict, Akira and Kim is a foreigner but stay in Thailand in this case. Go back to the domicile definition under the law of conflict not clearly specified, but right. Go back to the general law under Thailand law. The general law, the definition of domicile mentioned in the Thai Civil and Commercial Code means that the principal resident. In this case, for this slide, I understand that Akira and Kin is a domicile in Thailand because both of them stay in Thailand for the business, for the family, not the tourist, not for study short term, but in this case, it's a principal residence. And then if any divorce, the Thai court will be adopt this case for Thailand law.
Right, so we got a clear conflict there. So we have Japanese law seeking to apply across, and then Thai law resisting it. I think from a Singapore perspective, it will be slightly confusing because they would have to see whether or not there has actually been a change in there's a change in the matrimonial domicile across. So from a common law standpoint, which it would apply in Singapore, it's actually a fairly difficult question because the law applying in this area is fairly ancient, and the transposition of the change of a couple's matrimonial domicile is not something that's heavily trafficked in the case law. So that would be something that would need to be looked at. Generally, you can have a change and it can be recognized, but it would be deal with, and it would occur because things like divorce, death would give rise to the community issue. Okay, so looking at succession. So here we have the skill of succession planning, and I'll just wait for a moment. And what we're looking at is the transfer by Akira of assets in Singapore into a Singapore trust. So if we look back, this used to be an investment account that was held by Akira personally. And he was convinced, presumably by a relationship manager or some other financial professional, to create a trust. Now, the questions that are asked here is, what is the Japanese tax consequence and what are the Thai tax consequences of creating a trust of assets held in Singapore whilst Akira is domiciled and citizen of Japan, but tax resident in Thailand? I think I'd invite Tsuchi to deal first with the Japanese tax consequences of creating this trust.
Yes, from a Japanese perspective, the point is if the trust is transparent or not. So if this trust is transparent, this arrangement will be ignored from a Japanese perspective, and there will be no change. And if this trust is treated as a corporation for Japanese tax purposes, the tax treatment will be totally different. But in many cases, this type of family trust should be transparent from a Japanese perspective.
Right, and when you say transparent, can you just expand a little bit on what that principally means within a tax context?
Yeah, so basically almost all the trust is transparent. So, so that should be ignored from a Japanese perspective. But if it's a kind of similar to corporation, it's sometimes treated as a corporation. So we have to look into the trust deed in detail. And for example, if the beneficiary is not identified at the time of the trust, that trust should be treated as a corporation. But on the other hand, if the beneficiary, all the beneficiaries are identified at the time of the trust, basically that trust should be treated as a transparent trust.
Sad.
Of in like children, right? Can you hear me? Is that okay?
Yeah, can you repeat, Zach? You broke up.
So I'm just thinking about the concept of the beneficiaries being identified, and whether or not, does this mean that they are a class, like all the children of X, or it means that they're not identified at all? How does that work?
Yes, the name of the beneficiaries must be identified when they create trust. So sometimes under the trust deed, which is established under the common law countries, sometimes beneficiaries are not clearly identified in the trust deed, and the beneficiary will be identified in the future. So that trust may be treated as a corporation for Japanese tax purposes. And so that's why we always look at the trust deed and each beneficiary is actually identified or not.
Right, right. Okay, thinking about in terms of the tax consequences in Thailand on Akira, who's now a Thai tax resident,
Yep.
creates a trust of assets in Singapore. Are there any applicable Thai tax consequences that we ought to be aware of?
Similar to the first case that we discussed before in terms of Mr. Tanet and Rutna, because in Thailand, for personal income tax purpose, we have no rule on the nationality. We have a resident rule, we have a source income rule, and in this case, Akira Sang and Kin are the Thai tax resident. Similar tax consequences when they both of them set up the Singapore trust. It depends on the control or not control or PTC, private trust company or corporation. If they still control, it means that the ownership or the possession of the asset not transferred to the trust. They still control. Yeah.
Okay.
Yeah.
Now, just looking at the divorce implications. So here we have Akira divorcing Kin. And the question is, based on which Thai court will exercise jurisdiction. Here the difference is that Akira and Kin are Japanese citizens and Japanese domiciliaries. So the only connection with Thailand is residency. Now, is residency enough for them to be within the Thai court's jurisdiction to exercise its divorce powers over their marriage?
Right. The Thai court will consider the conflict of law. In this case, two issues: domicile in Thailand, principal residence in Thailand, or the nationality. Because both of them are Japanese, the court will consider what the legal consequence from the Japanese law perspective. They can make a divorce if the Thai court consider that the Japanese law not allow to make a divorce, then the Thai court will follow.
Right. But generally, because the marriage wasn't registered and they're not citizens of Thailand, the Thai generally wouldn't get involved in what would be seen as a foreign marriage.
Yeah.
Right. Okay. Got it. Okay. Now, looking at the last segment of this, which is the succession law implications. Here we have Akira passing away whilst resident in Thailand, but remaining domiciled and citizen of Japan. And the questions are, with respect to the Thai property, what is the applicable succession law in terms of Thai immovable property, applicable law with respect to Thai movable property, and then sort of application of Japanese forced heirship. So would Thailand recognize Japanese forced heirship rules insofar as the Thai property is concerned? So if you could help us with this, Kunchinavat.
Yes, in case of the Thai succession law, in case of the foreigner own the immovable property, in this case, I understand it's a condominium. Condominium. And under Thai law, the foreigner can own the condominium in Thailand, not over 49% of the total areas of such condominium. And in case of the estate asset are the condominium, the Thai court will consider the Thai law because under the rule of the property situation in Thailand. In case for another issue, second question, movable property, the Thai court under the conflict of law will consider the domicile of the dead person. In this case, Akira Sang is a domicile in Thailand and his principal resident in Thailand at the time of death. At the time of death, then the court will adopt the Thai law to take care of this case. In case of movable property, for example, cash, share in Thailand, investment in Thailand, portfolio in Thailand.
Right, and insofar as the Japanese forced heirship rules, they would have no application in Thailand. From what they would be enforceable in Thailand. The Japanese forced heirship rules under their succession law, because from what you're saying, only Thai succession law will apply.
Yep.
Got it. Okay. So insofar as the Japanese property is concerned, what is the applicable succession law to the land, the immovable property? What would be the succession law for the movable assets? And then the application of forced heirship rights. And then finally on the Thai-Japanese tax implications. So which law would effectively the Japanese courts apply for the succession? Would they apply Thai law because of the residency, or would they apply Japanese law? Which would be the case?
Yeah, from Japanese perspective, Japanese law will apply because Akira-san is a Japanese citizen and he is a Japanese national. They have Japanese nationalities. So that's why, you know, all the assets, including immovable property and movable property, will be subject to Japanese succession law. Right. And also Japanese forced heir rights will also apply. Kin-san is a wife of Akira-san, so that's why she has a 25% legal right. And also Atsuko-san is the only child of the Akira-san and Kin-san, so that's why Atsuko-san has also 25% legal right under the Japanese law.
Right, and then looking at the tax implications, because both Thailand and Japan have inheritance taxes, how is this going to play out in terms of double taxation potentially?
Under the Japanese inheritance tax law, all the properties, including the Japanese properties and the foreign properties, will be basically subject to Japanese inheritance tax. But if Akira-san and his families continue to live outside Japan for more than 10 years, only Japanese assets will be taxable. In that case, foreign assets will not be taxable.
Right.
Okay.
How would it apply for Thai purposes, the Thai inheritance tax?
Yes, Zach. In terms of the Thai inheritance tax, Akira is a person who reside and stay in Thailand. It can be said that Akira is a resident in Thailand and subject to Thai inheritance tax for the asset in Thailand and for the asset outside Thailand. This is similar to Japanese inheritance tax law.
And presumably there's going to be some level of relief at the tax authority level, that they will grant some level of credit for taxes paid?
Yes, yes.
Right, okay. Okay, and I think in terms of the Singapore Trust, whether Japanese forced heirship claims can be made against the trust. So looking at the case of Kin and Atsuko, and how would Singapore react to a potential attack on the trust from a forced heir? So I guess the first question is it possible or is it common for Japanese heirs to make claims against foreign assets held in trusts if it in some way infringes their forced heirship rights?
Yeah, in Japan, it sometimes happens. So, you know, Japanese forced heir claim is very strict under the Japanese law. So that's why sometimes some heirs argue that they have some legal rights under the Japanese law. But in Singapore, maybe Singapore government or Singapore court may not accept such treatment. That is my understanding.
Yeah, that's correct. So from a Singapore standpoint, Singapore does have within its laws a anti-forced heirship provision, which would seek to defeat any sort of claim made on the basis of succession or inheritance. So it wouldn't be a claim that would necessarily be recognized in Singapore if it were brought by Kinata and Atsuko. Okay, right. I think that brings us to the end of all of these scenarios, and we can happily transition to the questions that have been made. We've overrun by about 5 minutes in terms of the main section of the talk. But if we can run through some of the questions, I'll invite us to have a look at some of these. Insofar, we've got one, insofar as life insurance is concerned, is that seen as an asset? We can deal with this from a Thai perspective as well as from a Japanese perspective. So does life insurance constitute an asset? I suppose we're looking at it from the beneficiary standpoint, or we're looking at it from the insurance the insured perspective. I think just talk generally around whether or not life insurance is seen as an asset. Anything on this, Kunchinavat?
Okay, I can separate two timeline. The first one is the insurance proceed distribute to the insured person before the death. Uh, the 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 benefit from the insurance proceed, it is a asset, but not subject to personal income tax because exemption on these. And another timeline, second timeline after death, the beneficiary receive the insurance proceed, the benefit. This is not subject to inheritance tax because such benefit not the asset before death. Then the beneficiary will be tax exemption on personal income tax. This is a general idea and the law clearly provided. But you know, in Thailand, the certain Supreme Court case, the recent case, the Supreme Court ruled that the life insurance without beneficiary, lack of beneficiary, or beneficiary dead, or pass away before the insured person, then such insurance policy no beneficiary. The benefit of insurance policy will go to the estate fund and subject to Thai inheritance tax.
Right. What about policyholder in the case of the ability to surrender the policy? Is that seen as an asset? If you're able to surrender the policy and then effectively realize some investment return on a surrender, is that seen as an asset?
Yes.
Right. Okay. Is there, from your side, is there any particular difference from a Japanese standpoint on viewing life insurance as an asset?
Yeah, from a Japanese tax perspective, such insurance policy should be treated as a tax, treated as assets. So that's why cash surrender value or insurance premium, insurance proceeds will be taxable assets in Japan. But in terms of the Japanese forced year claims, insurance policy should be, outside the scope of such claims. So sometimes that treatment is used by, wealthy families.
Right.
So there is some difference between tax treatment and legal treatment.
Right. And then we've got one in terms of the Thai elite program, we're saying, is there a chance that a Thai elite resident becomes taxable in Thailand? For instance, if they stay longer than 180 days, withdraw funds from their various international sources. So the idea here is, as a Thai elite member, do you have any tax privileges at all in Thailand as an elite member?
I don't think so.
Andrew, on your side, when you're discussing the Thai elite program, do you typically discuss the individuals becoming Thai tax residents and some of the consequences of that?
We are not tax advisors, so I can't totally comment too much on it. Kun Chinapat would be, I think, the man to go to for the more detailed response. I do know that after 180 days and you are a Thai tax resident, then too that the foreign earned income from the previous taxation year brought into the country would not be taxed, however. Is that correct, Kun Chinapat?
Yes, it is. Yeah.
And then one of the final questions here is, the Thai tax system, when it comes to foreign sourced income, seems to be very, very generous. Is there any prospect of that territorial system changing, particularly in light of the COVID crisis and the loss of revenue, etc.? Kunchinapat, you're like an insider guy in all these things, right?
Okay. If we use the territorial tax system for personal taxation, different from the corporate taxation because in Thailand, in terms of personal tax and corporate tax, we adopt different treatment. In terms of the personal tax, we have no such rule and no change. Just the source income rule and resident rule. No citizen rule similar to US. They have the nationality rule, different from, but corporate tax system. We adopt the worldwide income tax basis, different from Hong Kong, Singapore, Malaysia, right? If this question focus on the personal tax, no change. No, not change.
No change. All right.
Yeah.
I think.
Well, Zach, it's an interesting question. Do you happen to know whether the FATF have already done a peer review for Thailand? And did you see any, if that was the case, did you see any remarks from the FATF on this territorial system of Thailand? Hello?
From Kunjinapat's perspective, have you seen any international regulator like the OECD? Have they criticized Thailand's territorial system of taxation? Have you seen any criticism of that?
No. Just not on this issue. Just the BEPS, yes. BEPS, CIS, yes. BEPS, base erosion, profit shifting, yes. And then that's why Thailand we launched the new law, transfer pricing law this year. And then this year the disclosure form is required for the certain companies. Most of them are the listed company in the Thai stock market.
Right. Andrew, from your perspective, the Thai elite members that are currently outside of Thailand and finding it difficult to come back, is there any discussion going on at the governmental level? Because I know you guys are the concessionaire for all of this. Have you got anything that you can say to elite members that are stuck outside of Thailand wanting to get back?
Yeah, I mean, at the moment too, I do know that the Thailand Privilege Card Company and the Ministry of Health are going back and forth quite regularly to determine when it would be the safest to allow elite visa members back into the country. I mean, the Thai, it's really, and it changes day by day, so it's difficult to say. The Thai government did just change their status on this, and they are allowing some foreigners in the country at the moment, those work permit holders, those working in the medical industry, those seeking medical attention, as well as those who have spouses in Thailand at the moment. And they are talking about the next phase to come would allow maybe tourists from the bubble countries within possibly Asia to also start entering, but it's up in the air at the moment as to when elite visa holders specifically will be allowed back in.
Right. Okay, I think that's pretty much it for today. I'll just say to your time, and for those who registered, able to end the whole thing and watch the recording at your leisure. I just say at this point, thank you to obviously to Andrew, to Joe, and to Kunjinapat for taking part in this virtual. I think it's very useful. I think we're on time as well, which is great. Okay then, guys. Well, I think we'll call it quits there for today, and just thank you very much for helping with getting us through this this webinar. Thank you.
Thank you, Zach. Thank you.
Bye bye.